Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell, and here to help take us beyond the bell. It's our simulcast, global simulcast. Carol Massar, Paul Sweeney in for Tim Stenovic, and we welcome our audiences across Bloomberg Television, radio, as well as on YouTube. A close of the markets, and now the setup, Carol, right now for Netflix earnings going to cross the wire any minute now.
Yeah, I'm kind of glued to our live blog, just waiting for those numbers to cross. In the meantime, we've had a green day, but it's been a volatile one. And Paul, we've definitely been bouncing around here on the equity side of things.
Yeah, we're going to end up in green, but we had some really strong gains here this morning. Lost a little bit of the momentum, but found it again. But as Romaine was mentioning, the street will be really focusing on Netflix. How many subscribers did they add? And tell us about this ad-supported tier.
Paul, we love having you on days like today, parachuting you in because, of course, this is your huge expertise, and we get to leverage your knowledge from the sell side as well when we think about the fundamentals. And really, of course, Caroline, the way that this presents sort of the macro picture of another big bellwether, and now, of course, going to be a player in the ad space.
And the micro is starting to perhaps overtake some of the macro headwinds that we've so fixated on. But really, is this a question of fundamentals? Have we actually been more technically driven in terms of the bounce that we see across the benchmarks today?
Yeah, I mean, interesting to see what people are buying, whether it really is just about valuation or sort of that proverbial capitulation that we saw in that note out by Bank of America from that latest fund manager survey. Capitulation when it comes to investors, capitulation when it comes to the macro, and if you believe Michael Hartnett, capitulation when it comes to policy. Don't think we're quite there yet. Nevertheless, here are the closing bell numbers here. Dow Jones Industrial Average going to finish the day higher by about 1.2%. The S&P higher by 1.2%. The NASDAQ higher by 0.9%. And the Russell 2000, Carol, going to finish the day higher by about 1%.
Yeah, still pretty broad-based in terms of the moves to the upside. 451 names in the S&P 500 gaining ground today, Taylor. 51 lower, 1 unchanged.
And go ahead.
No, go ahead, Romaine.
Just keep an eye here on Netflix earnings. Should be crossing the wire any second now. Go ahead.
Yeah, we're getting some releases out here on the investor wire. We'll wait to get those, of course, as we think about that. In the meantime, we're getting a lot of stability within the bond market.
Here come the numbers. So we see Netflix not providing paid membership, Taylor. Forecast starting in fourth quarter. So overall, we are seeing that they were fourth quarter revenue of $7.78 billion. That is a miss versus to the estimate of $7.98 billion. Third quarter streaming paid net change up $2 million, a big beat, and of course, winning back all that they lost in the first half of the year. Romaine.
Here's your revenue number coming in for Q3, $7.48 billion. The year-over-year growth, that's about 16%. Not bad here. Operating income 1.8, and we should point out the operating margin right now at 23.5% here. The EPS number coming in at $3.19. We're going to get you some comparisons here, but two things jump out at me, Taylor Riggs. The first is free cash flow, negative 106. Right now, we're looking at free cash flow, and net cash provided by operating activities is positive, but only at 82 here. So an interesting mixed picture here for Netflix as they pivot now to what I guess is supposed to be a new ad tier and potentially a reacceleration in growth.
And one of the big questions from Lightshed Partners, Rich Greenfield, of course, is are you shifting your content strategy to reduce costs? When you think a look at the negative free cash flow number, what that means. Reading through page 2 here of the press release, Carol, and they talk a lot about, of course, again, U.S. dollar strength is a significant headwind for them of what they call them. And you're really looking at a sequential decline in the fourth quarter in their forecast entirely due to the strength of that dollar. And again, you wonder how that sort of is impacting the way they're able to forecast those numbers too.
Gotta say, for radio, TV, you can see it clearly, but the stock is up more than 8% in the after hours. And I'm looking at our live blog. Chris Palmieri, entertainment reporter, follows Netflix very closely. Revenue, earnings, subscriber gains are all a beat, Paul.
Yeah, the subscriber gains for this quarter came in at $2.4 million. The consensus was for, 1 million subscribers that came in at 2.4. So better on the subscriber number. We're not going to get any subscriber guidance starting next quarter. And that's the company saying we really want Wall Street to pivot away from the subscriber story and start looking at the revenue and the cash flow and the earnings story.
But if that is the case, then, Paul, what is that story? $7.78 billion, that's the forecast. That's not really in line with estimates. In fact, it's a touch light. But more importantly here, at least on a quarter-to-quarter basis, doesn't actually represent a tremendous amount of growth.
No, it doesn't. But I think it's really going to be about the profitability here. We know that the U.S. market, which is their most mature market, is very profitable. And as more and more of their international markets mature, it's going to be a real profit story. assuming they can, in fact, keep a lid on those programming expenses.
Paul, I'm curious what you say. Top 3 of the press release, they say that our aim is to give prospective new members more choice, not to switch current members from their current plans. This is, of course, when they're talking about that ad subscription model.
Yep.
What do you make of cannibalization and, in their words, the lack of it?
It is a risk because I know what my subscriber revenue is. I'm not sure what my revenue model is going to look like. I can model it out, but I'm just not sure what my cost, what I'll be able to charge for an ad on Netflix. They're going to only air about 4 minutes an hour of ads versus maybe 15 minutes an hour in a network show. So it is a unknown model to them, and it's an unknown model to Wall Street. So it's going to be a little bit of a guess here over the next really couple of years, I would say, as they develop this advertising business.
What's interesting is, of course, what the first company to really be blaming dollar strength on a lot. They say since January it will hurt the year revenue by about $1 billion, the dollar strength, and really saying that's the sequential decline in revenue for this quarter just gone entirely due to FX overall, Romaine.
I think it's, and just to get away from the numbers here, I think it's interesting. They actually, some interesting commentary here about how they release new titles here. And they talk about sort of the bingeable release model and basically defending it, saying that, according to them, this is their words, it helps drive substantial engagement, especially for newer titles. It also talks about how it wants better metrics with regards to how they measure viewership, sort of similar to those Nielsen ratings, basically saying that it used something, I guess, familiar to you in the UK, Caroline, the Broadcasters Audience Research Board, and saying that they want to see a better accounting for how streaming services viewership on some of these streaming platforms. So interesting, and maybe this gets to Paul's point too, that this isn't now just about subscribers. They really want to show the impact of what they're putting out there, and maybe that is the story.
They say Squid Games would not have become a global momentum if we hadn't binged it and released it all at once. That's how they're thinking of building that momentum. Let's get
Geetha Raghunathan into this conversation. She's the media analyst for us down at Bloomberg Intelligence. Geetha, just tell us what jumped out at you most out of this report.
I mean, phew, what a relief here, seeing these numbers. I mean, they're finally back to growth, which is really good. And their guidance right now, again, pretty much in line. And what's really encouraging to me about that 4Q guidance is that they say that they've really not baked in any of those ad tier expectations. So there is potentially a lot of upside to that guidance as well. Remember, 4Q is one of their heaviest quarters. They have a huge lineup of big hitting content titles. So again, there's a lot of optimism in this report.
Well, and so what do you think specifically Netflix is trading on right now? Geetha, continue to trade 10, 11% higher. The stock is down 60% this year. Is it that everybody was so negative on the company, or is there something very specific that you would point to here?
I think what everybody was kind of really worried about was, has subscriber growth really kind of hit that wall? And just the fact that they were, they did speak to a lot of those seasonal factors in 1Q and 2Q, just the fact that they've been able to kind of reverse those trends and more than deliver. They've obviously beaten guidance, beaten consensus estimates. And now you do have a very, very viable catalyst in terms of advertising. Some of the engagement metrics that they put out in that letter, those are huge engagement metrics. Those would be, that's a gold mine for them when they're trying to attract huge ad dollars, which is exactly what they're trying to do. So any advertiser would want to jump on that opportunity. And so this report really sets them up, I think, so beautifully for that launch of that ad tier.
How is this a read across the industry, as we're seeing Walt Disney, Roku, Warner Brothers all lifted on the back of this in after hours trading as well, Geetha? Or how much is this idiosyncratic, specific to Netflix?
I think a lot of it was specific to Netflix because we saw subscriber growth kind of completely stall at Netflix, whereas we were seeing some of the other platforms actually report growth. But you have to remember, they're all in different stages of their life cycle. So obviously Netflix is the earliest game in town. So they obviously had that huge first mover advantage. I think what it tells us is obviously there still are people, who are going to be willing to subscribe to the service. The market opportunity is still pretty much there. These streaming services just kind of have to find ways now, creative ways of monetizing their audiences.
They talk about competition, saying that right now their competition is still losing money as they pivot from linear to streaming. But then they say ultimately, we know that our competitors are going to build a sustainable, profitable business. What is the competitive landscape that Netflix is really addressing here?
Yeah, I mean, they are looking at some of their competitors, and we can, talk about Disney, of course. They have huge pieces of content. They've launched in almost all of the big markets. They just have huge, global IP brands. But then you look at some of these other competitors, and Amazon comes to mind. They've made some huge bets just in the third quarter alone with some of the pieces of content, whether it was a Lord of the Rings, for which they spent $700 million for just a single season, or whether it was Thursday Night Football, which again cost them over $1 billion. So, some of these big tech giants, especially with deep pockets, are unafraid. They are willing to go big. So Netflix has to be able to position itself well against all of these competitors, whether it's, the old media companies or some of these newer tech entrants.
All right, we're going to leave it there. Geeta, thank you so much. Geeta Ranganathan, who follows, of course, Netflix and the whole space for us. And so we're watching shares of Netflix here up more than 12.5% here in the after hours. All right, that's a wrap for our cross-platform coverage on radio, TV, YouTube, following Netflix into the after hours. And we will see you same time, same place tomorrow.